to see you.
Just move on
Carlos.
toward your destination. Though you may find from time to time.
So, I want to introduce you to a couple folks. You've been here for a couple of days. If you've been here for a couple of days, you probably met these folks. But in case you haven't, I think you all know my co-founder and our general counsel, Gautam. But we've got Carlos Gomez, really fantastic Vertalo client and partner. He's a CPA and attorney from Australia, currently living in Miami. And he is the CIO, the Chief Investment Officer of Belobaba crypto fund. Carlos oversees the investment decisions of the fund with a combination of legal and financial skills gained through a long and varied career, really deep in finance. Prior to his current gig, Carlos was the performance manager of a large state government fund in Australia. Are you going to speak Australian today?
No.
No? Okay. And one of the few remaining jurisdictions with a AAA credit rating in the world, so thank you for that. I'm sure they're, good job on that one. And he was the ambassador during 2020 for the Polka Dot Protocol, for Polka Dot ambassador for the city of Miami. That's awesome. We're also joined by Annelise Osborn. Annelise is the head of institutional for Arca Labs. In Annelise's role, she's responsible for working with companies to drive blockchain innovation through strategic partnership and advisory services. Annelise joined Arca after 20 years of experience in finance, credit, real estate, risk, structuring, governance, and digital assets. Annelise and Gautam and I first met when she was at early tokenization and digital asset securities platform called Propeller. And it's always great to see folks come into the industry and then stick with it and keep on innovating and evolving. It's fantastic. Prior to Arca, Annelise worked in the digital asset space at Propeller and 12 years at Moody's Investor Service, running commercial real estate teams within the structured finance group. So you've got some really great institutional experience alongside Gautam's 15 years of Credit Suisse in risk management, investment in alts, and also prime solutions for hedge funds. So please give a warm round of applause and welcome for our final panel of the day. And looking forward to this.
With your indulgence, I'd like to respond to the adolescent stunt that Dave pulled in the last panel here with renewable energy. I'll have you know, Dave, that in Indian villages, it's quite common to have electricity that's generated by that.
I was only half joking, which is both.
So, thanks for coming. And
thanks for having us.
Yeah, and so look, funds have been around for a long, long time. Why blockchain?
Okay, so I'll start. So I'm Annelise Osborn. Thanks, Dave, for the very kind introduction. And I'm at Arca Labs, and JD was here speaking earlier. We had a breakout session, so you might have already heard this, but this goes into why funds. So Arca is an asset manager, and we have 4 active funds. We're based out of California. And we invest in crypto, but they're traditional fund structures. And we wanted to create something like an ETF. So our co-founder co-founded Wisdom Tree and started the ETF movement back in the day, which was slow to get started, but then when it picked up, it skyrocketed. And so we were looking, how do we create a digital structure for this? And we created the BTF, which we'll get into, and that actually launched Arca Labs. But I think there's a lot of more efficient structures, and I think there's the digital. I'm a huge believer in digital assets. I'm also a believer in the institution level of digital assets and how we really need to make this institutional, so we need that support. And to do that, we need to create funds of institutional quality. So it's kind of a short way of saying why, you're asking why funds, but I think there's different reasons we'll get into about why people want funds and what funds can actually bring for expanding the universe and investors' perspective. It also expands use cases. It allows trading throughout a period of a fund, therefore we're dealing with private funds that generally aren't traded. And then obviously public funds like the fund we'll talk about later that we've created that is actually digitized.
So in our case, Carlos here from Belobaba. I, part of the team, we're strong believers in the technology as well. So I think Bitcoin opened the gate for a wide choice of innovation alternatives. So investing in cryptocurrencies, I think it's, of course, a no-brainer for us, especially in the long term, because the demographic reason it's spoke in our investment thesis that obviously the demographic pyramid is moving up, and in 20 years' time, all the bankers, the legislators, the president, the regulators are going to be members of this generation that are now growing, understanding this technology. So I think in 20 years' time, things are going to be very solid. So we want to be 20 years ahead of what's coming. In terms of using an investment vehicle like a hedge fund, we want to use something that is simple, easy to understand by most investors, by the traditional markets, and obviously tokenizing puts a layer of, let's say, innovation on top of something that's very traditional, but matches perfectly with investment thesis of being fully crypto native.
Okay, and do you like when you're thinking about structuring of the fund, right? What are some of the considerations that come to mind when you are going to be using the blockchain? Is there anything different that you have to think through than if you were creating a fund that's has nothing to do with blockchain?
Well, we believe that the key idea here is enhanced liquidity. So by tokenizing or by designing a fund that it's mostly based on a tokenization strategy, we believe that investors or smart investor can use this security assets to, as we just exchanged ideas before early today, they can use this asset not only to hold, but also to use as a collateral for other strategies. So I think that's the key component. In order to get liquidity, we have to give some candy to the market. So we have to lure them with something innovative and also advantageous for them to trade in the future.
I would say, if we think about it, we look at how companies could potentially go public not using bankers, right? And so I think there's a lot of things we'll get to down the line, but I think where we are now with creating funds, we need to work within established structures for the most part. When we created a registered fund, a registered 40 Act fund. We spent 2 years with the SEC going back and forth for their approval for the fund. One of the most important things for them was having a transfer agent. And so I know there's been questions if you wouldn't need one, but I think that you definitely need a transfer agent. Thank you, Vertalo.
You're welcome.
I think there's a question of how you want to structure the fund. If it's a private fund, I think we're seeing a lot in the world of private funds. I can tell you a little bit about my interaction. I work with a lot of, so we internally at Arca Labs, we created the BTF structure, which I think we'll talk about in a bit. And for that, we used where you can put in something, we used US Treasuries. So you can put in something that is not digitally native, and then the shares of that fund come out as digital assets, right? And with ideally trading peer-to-peer. Most of who I'm talking to, working with different large companies and institutions, are interested in creating funds, and they have different reasons why they're going to create those funds, but they're more private funds. So with the question of what would we need, most of them would need fund admins. It depends on the structure of the fund, if they would still need fund admins. And then it also depends on custodians, how it will be held, if it will be held with a broker-dealer and book entry, because what we're also coming across is people that are interested in offering the optionality of having it as a digital asset or having it in book entry form, with most idea probably likely that they'll create a token when they want to trade it. So I think that is a question as well. and there's a lot of infrastructure plays there, right? Because then you have to figure out which chain you want to do and which structure you want to do, but also which counterparties take that chain, for example. So that's why I think a lot is done on Ethereum, because it's the easiest. Most of the activity is there, and most of the counterparties accept Ethereum.
Great. So that brings up an interesting, feature. Like, do you sometimes, or would you, like, instead of tokenizing the whole fund, just tokenize a sleeve of it?
There's lots of different things to think about, I would think. If we're talking about tokenizing funds, people talk about the liquidity, how they want constant liquidity. Not everybody wants liquidity all the time from a NAV perspective, which is something that we're working with some large fund managers on, how to create a digitized fund without it actually them constantly being concerned about overnight the NAV trading down. So that could be problematic. But one thing we're looking at is doing sleeves of funds. And so as funds are created, it's easier to do them as they're created as opposed to doing a mirror. I think it's a lot more difficult to mirror a fund that's already actually created, but to have it digitally native. And that if it's, say it's a $100 million fund, we'll do a $10 or $15 million sleeve of that. So we're creating that structure as well. And we're just making, the devil's in the details, right, in the documents, however that fund is structured. Which could be, if there are capital calls later, like that would be really difficult to do a capital call of a token. And so it would have to be a fund that wouldn't be needed, or if there'd be some rebalancing of the traditional structure of the fund doing capital calls and the other not. So there's just a lot of different structural issues, but part of it is understanding what people want, right? What is the issue we're actually looking to accomplish from this?
Similar strategy. We are established, we are regulated in Gibraltar as a master level and a feeder level here in Delaware. But in Gibraltar, the corporate structure is a protected cell company. So it's interesting because below the umbrella of the company, you have like 24 cells that are segregated, are quarantined on each other. So we are only tokenizing cell A, which is the hedge fund, and then by a tokeny. And then the feeder fund of the cell A is tokenized here in the United States with Vertalo. But we have also cell B, which is follows like a stable strategy, which is not tokenized, and also for the same reason that we don't want that enhanced liquidity to mess up with the NAV. And also we have the cell C, which is the venture capital specialized in metaverse and gaming. So to answer your question, depend of the sub-objectives of the investment strategy. We may not be interested in tokenizing everything, but certainly the cell A, it's our main product, and it's tokenized.
Well, thanks for that. Because it's great. You have secondary market liquidity for the funds, right? But for the fund manager, that's superb too, right? Because you don't have redemptions. Instead, you just have constant capital to manage.
Yeah, that's the idea. Obviously, when you design, you have to think in 20 years. Obviously, the main goal, I think, is a shared view that just because we tokenize an asset, just because we list it in an ATS, that doesn't mean that the next day we're going to be floated with liquidity. But we have to put some assets in the market. We have to put some ideas in the market so the liquidity will come. But when that happen for the investor, we have the advantage of pretty much having like a security with a hedge fund strategy underlying that trades 24/7. So that could be something really, really beneficial for some investors, but also from the asset manager perspective. Just think about it. If you have a normal hedge fund, and even if you have a very good month, and then an investor says, okay, I need my $5 million redemption, thank you. In 7 days I have to liquidate. The market may have a different opinion. So probably this $5 million they have to liquidate would represent $20 million in assets they have to sell in the wrong day. But if things are moving along, and then we have a 24/7 liquid market for the security token of the hedge fund, if investor A wants to exit with $5 million, if they log in at 11 p.m. the night, and then they found someone interested in buying $5 million worth of the security token, I will only receive a call from my transfer agent saying, hey, investor A is gone, investor B, it's in, my portfolio will be untouched. So that's a very good advantage.
That you were saying about how investors come in and you put the money to work in the market, right? Do you feel that retail investors will now be able to, because of the fund structures that you guys are coming up with, but they gain access to private companies that they might not otherwise gain access to?
We're definitely looking at that. Part of this is to open up the investor base. And so even if it's accredited investors as opposed to qualified buyers, to give people access to institutional quality product that they're not given access to now. I think that's what blockchain really opens up markets for, as well as on the retail side. Obviously, there a lot of structure and legals go behind this, but I think that you can actually offer, you can expand to a larger group of people. So people are looking to, majority-wise, are looking to increase that. So we actually do have some large private equity houses that recognize that as being a problem and looking at the next generation. So it's the next generation of investors as well. And so I think they're trying to target them now before they're kind of the private high net worth, so they can get them involved in their funds, and it gives people otherwise they wouldn't have that opportunity. Yes, definitely.
So, sorry.
Same was. I mean, it's a work in progress. So tomorrow we won't have that, but actually that will be the ideal scenario when retail investor can access hedge fund products in a very efficient way. So that will be great.
Yeah. And I know at least one of the panelists has to rush to the airport right after this panel, so I did want to give you the opportunity to describe that fund you were referring to earlier on in the conversation.
Sure, it was on the list of questions, so I was trying to hold off. As I had said before, at Arca, we created the BTF, the Blockchain Transfer Fund. We would love for anyone to use the structure. It's open. We're happy to work with you. So the idea here was to create a fund that issued digital shares. And so, as I said before, we spent 2 years working with the SEC, and we created this fund that ideally the digital shares can trade peer-to-peer. And so we've published a paper on it. You can actually look at, it's called, it's Arca Labs or Arca with BTF. And happy to share. You're welcome to reach out to me either via LinkedIn, or you can send me an email. It's annelise@arcalabs.com. But that was the idea. And our first example of what we used was U.S. Treasuries. So we put in essence, U.S. Treasuries, and when you purchase a share of the fund, you get one U.S. Treasury, and the NAV is $1. So we have use cases for our Arcoin, which is not a stable coin. It is a low volatility coin, how it's defined, but to use for collateral and treasury management as a wrapped treasury. So that's kind of that was our first step in what we're creating. We're looking for other use cases as well. It's a registered fund, so there's more cost for the registration. And so we're looking at what can we put in there that people don't have access to otherwise. So there's a lot of talk about real estate, for example, but REITs have good tax treatment. And so we're looking at weighing what we could use, the balance of using that for a REIT, and if that would be financially more beneficial in our registered product. We're looking at other assets as well. So hopefully we'll have more to share with you at the next conference of different use cases that we've used the BTF for. But we're really excited about it, and we think it's really just a step like the ETFs that we'll be able to find more digital shares issued as these funds.
So in our case, when we decided to create a hedge fund, we were looking for a jurisdiction that would accept us, that would regulate us in a very efficient way. So we went shopping pretty much. So we discovered this little territory in Europe called Gibraltar, and we found a lot of things. We found that obviously, as a British territory, they follow the English common law, so it's a legal framework that it's well understood by investors around the world, well liked. Also, they have a legislative product that focuses in attracting distributed ledger technology companies. And also, they have a very efficient legislation to attract hedge funds. So they have what they call the Experienced Investor Fund, which is sort of the equivalent of accredited investor in the US. It's interesting to be classified as an experienced investor in Gibraltar. There's like 20 ways that you can be classified, but one of them is investing 100,000 euros. So if you invest with us 100,000 euros, doesn't matter if that's the only wealth that you have, you are pretty much good to go. So it's very easy to prove. It's very easy to just maintain. So we took that license and we tokenized the fund in using the services of Tokenized in Luxembourg. We wanna just follow the path that after a period of restriction, getting the securities floating 24/7 in the market, and also think. Gautam, you mentioned something about the importance of price discoverability and give the confidence of the investors that the price is right. So I think it's interesting about having the right service provider. So we have an independent fund administrator that obviously they calculate the NAV on a monthly basis, and the token is pretty much priced and pegged to the NAV. So I think we have a third-party independent body certifying that the price of the security token is fair, based on literally the valuation of the portfolio. Now, because it's in Gibraltar, they follow some certain regulations of the United Kingdom, certain regulations of Europe, we have a problem if we want to attract US investors. So we have to create this feeder fund in Delaware so the US investors don't get caught in the passive foreign investment provision. So that's why the only reason of this special purpose vehicle in Delaware is just to attract funds and then feed the master fund in Delaware. But also we want to mirror the same structure and give the US investor the benefit of receiving a security token for their investment in the fund. So we create the US version of the token, and Vertalo, thank you, are helping us with the asset transfer as a tokenized platform. So at the end of the day, we're going to have two tokens. So they will be floating both with an app calculated exclusively in Gibraltar, but also we have a fund administrator here in the US that will be working hand to hand with the administrator in Gibraltar, making sure that the pricing of the US product is fair. So when we list in a platform, we're going to have two tokens. And yes, the answer to the question of a few people here, it could be arbitrage opportunities. Not many, but that's another incentive for some type of investor to provide liquidity.
Yeah. To me, this all sounds like it's actually making great progress, and it's actually quite smooth. And you don't have to change a lot of the way that you actually have traditionally structured funds. So hopefully you'll be able to get a lot of investors into them.
What's interesting is a lot of people are interested in the UI, right? So actually what the users see. So it's not as much necessarily the structure of the fund that would be different. It's the experience of the actual investor and what they're seeing for that it's not clunky, that it's kind of an easier click through than all the documents that they sign. So it's kind of funny that the front end is just as important to a lot of these players on the back end.
That's great.
Same-wise, I mean, it's issues about, for example, hosting an on-chain wallet. For some investors, important for regulation, on-chain wallet in Europe can only be used by European residents. Non-European residents have to use a MetaMask, and we know the MetaMask is getting better, but it could be daunting to some. So I echo that. So the user interface is critical for the success of this venture.
That's great. Well. Any questions from the audience? Keith?
Yeah, thanks, Gautam. Annelise, with the structure that you're talking about, the fund that's registered, what comes out? Is it a token? Is it a coin? You talk about Arca coin, for example. So what comes out of the lighthouse?
It's a digital asset, which is a token that we call our coin. And so what it is a representation of a US Treasury. So it's tokenized, however you want to define it. You have a share that is held in a wallet, that you would hold in a wallet.
So thank you all for attending. Oh, sorry, sorry, I didn't see you.
Yeah. So one of the speakers today mentioned that half of our time is spent talking about the regulatory landscape around this. And I appreciate that you spent the time you did going back and forth with the SEC. I'm curious kind of what their priority focuses were as you had the conversation back and forth. What were they most concerned about?
So when we first did it, we went and sat down and talked to them before giving them a big proposal to say, this is what we'd like to do. And they were actually not combative in any way. It was really, they just wanted to learn more, and they thought it was a good idea, and they just asked us to come back with more details. So really kind of the pushbacks that we got were on the transfer agent, which, like I said before, we're still working for approval for the peer-to-peer trading, which we expect to get shortly. But it wasn't it wasn't major pushbacks. It was actually very collaborative. Now they didn't, SEC doesn't accept, doesn't help structure anything, but it was just to work through. And this we went launched in July 2020, and so it was not the current setup. So I'm not sure how how that would work if we had to go through it again. But it's already been approved. It already has been approved, and so that's great to move forward. So they were helpful working with us.
I actually do have one question for you, sir. When you provided your example about fund structure and how investor A and investor B could essentially do that transaction seamlessly without requiring the fund manager to manage the redemption process, could you explain that a little bit more and help us understand what interface do those two investors kind of meet at to facilitate that exchange? Is that something that you provide at Belobaba, or how do those two investors kind of interact or not to get those assets to
Yeah, thank you. Good question. Again, interface is critical here. So the interface will pretty much the ATS that lists those tokens. So that platform have to work in conjunction with the transfer agent. So everything have to work smoothly. It's a challenge, I know, but obviously the investor have to be listed, have to be whitelisted, have to be registered in the ATS platform, and then they will be able to see the tokens floating. So the process will be the settle would come to an end in that the platform, then the transfer agent will be notified, and yeah, so that's the order of events.
I don't see any more hands up, so thank you all for attending. Thank you.
Thank you.
Thanks for having us.
And wishing you all a very pleasant evening. Yeah, so thank you.